Hey everyone, me Kevin here. Look, I can't help but feel a little bit jaded. All of the banks, Wells Fargo, JP Morgan, Bank of America, all of them told us, hey, even though we got economic headwinds, the consumer is in great shape. In fact, Jamie Dimon says, quote, and the consumer, well, I feel like a broken record. The consumer right now is in great shape. So even we go in a recession, they're entering the consumer. They're entering that recession with less leverage, in far better shape than they've ever been in, such as in 2008 and 2009, and in far better shape than they were even in 2020. Jobs are plentiful, and now, of course, jobs may disappear, things happen, but they're in very good shape. And obviously, when you have recessions, it affects consumer income and consumer credit. And Bank of America told us, hey, we might have 4 quarters of negative GDP, but the consumer is doing very, very strongly. Wells Fargo told us the same thing. But why then, if the consumer's doing so well, and this is sussing me out a little bit, is Apple being so weird about the consumer? Now, I don't want to suggest, even though that is somewhat what's being implied here, that Apple is the definition of the consumer, right? And so that's why it's also important, I think, that we start with some statistics to make sure that you know that I'm not just considering Apple here. And so we'll talk credit card volumes, and I'm going to talk to you about something that's sussing me out with Apple. So first, credit card volumes are up from well, they've decelerated a little bit, but at Q1 year over year from Q1, so Q1 2022 to Q1 2021, credit card and debit card volume was up 21%. That's decelerated to 15% year over year in Q2, but that's still nearly twice what inflation is. So even though inflation is, let's say, 8%, we're still seeing nearly twice the level of inflation as an increase in debit and credit card spend. The bulk of that, by the way, is credit card spend. Debit card spend's only up about 4%. And this is based on Bank of America Securities that gives us this research as published on July 14th. So just a few days ago on credit spend here and debit spend, which is really, really important to look at that the consumer is still spending money. So what then is sussing me out, right? Well, what's sussing me out is yesterday, Apple tells us that, oh, we're going to not hire as much because we're uncertain about the economy going forward and we're going to cut spending on certain teams, but we're still going to maintain our product roadmap. Now, this was reported by Bloomberg. Bloomberg broke the story based on conversations with confidential sources at Apple. So Apple didn't officially make this statement, right? But what's fascinating is it's very interesting to go back to a tweet that I made, and you could go back and look at this, but it's on May 8th, 2022. I tweeted the following. Apple executives were asked 3 times to answer how demand from consumers is changing. Apple dodged the question 3 times. Not good, I wrote. And then I wrote that I had actually sold my Apple stake. And so what I think is so fascinating about this is, on one hand, you have the consumer still spending a lot of money. Clearly, we're seeing consumer spending still positive on consumer growth spending numbers. Retail sales data was actually pretty strong, and we're seeing that gain in year-over-year spending, whether it's through debit cards or credit cards. We're still seeing that, and it's outpacing inflation. The banks are telling us the consumers are strong, and we're seeing balances in all quartiles of consumer incomes inflect up in just the last 2 weeks. But you'd think we're going into a recession, people are maybe worried, maybe their incomes would be going down, but no, people are either still getting paid more or they're pulling money out of somewhere to increase their bank balances and still fund net purchases in the stock market, which we're also still seeing inflows into markets. And now we're seeing inflows into crypto. So it's like, I don't know where this whole narrative of the super weak consumer is coming from, but somebody must be lying, because it doesn't make sense to me that Apple is super nervous and now cutting again, unless for some reason people just don't like Apple or something anymore. And yet the banks are saying strong consumer, balances are going up, and spending's going up. And this is where what I want to do is I want to just go through that earnings statement, that little earnings report where we got our first red flag. And I think it's a learning lesson. So I'm going to read that. So Katie, one of the analysts, says, congrats on the quarter. This is Q1. A couple of macro related questions, just given everything that's going on in the market. This was 3 months ago, right? The first is how you're thinking about the consumer spending as we see more stock market volatility, rising interest rates, inflation, and what metrics you're watching, either internal to your business or external, to understand whether you'll ultimately see a demand impact, particularly on the product side of your business. Tim Cook, Katie, hi, it's Tim. We're obviously monitoring our daily sales very closely. Okay, if you're monitoring your daily sales very closely, and all of a sudden you're cutting your staff, clearly you're probably seeing something happen here. But Tim Cook goes on to say, from an inflation point of view, we are seeing inflation. It is or was evident in our gross margin last quarter and in our OPEX last quarter, and it is assumed in guidance that Luca gave for this quarter as well. So we're definitely seeing some level of inflation that everyone's seeing. Okay, everybody's seeing inflation, and Apple's regularly talked about inflation that they're seeing in freight, but total dodge on a very clear question. How you're thinking about consumer spending, particularly on the product side of the business, what metrics you're watching. The only thing he talked about was inflation, which I understand that could be argued as a metric. Fine, maybe that could be a pass on that. So Katie comes back. And how are, just as a follow up to that, how are you thinking that might impact either the consumers in your business and whether it influences their ability to purchase at the same level? In other words, she literally just restated the same question because, again, the first one was a dodge. He says, well, we're monitoring that very closely, and we've sort of, but right now our main focus, frankly speaking, is on the supply side. Again, going back to freight and that freight-based inflation. So, second dodge. Then, Katie, okay, and as it relates to that, in China, how should we think about the lockdowns from an impact on supply and an impact on demand? Third question. And what products in your portfolio should we expect to see most impacted? Yes, good question. For Q2, we just finished restrictions in China, blah, blah, blah. And so in Q2, we did have supply chain constraints. They were significantly lower than what we had experienced during December, driven by industry-wide silicon shortages. But looking ahead, we have two causes of supply chain constraints, and we're going to have a $4 to $8 billion constraint because of that, blah, blah, blah. That's it. Then ends. No commentary at all on demand. That's, folks, 3 times Tim Cook was asked about demand. He says, oh, we're watching demand very, very closely. Gives no hint at all 3 times in an earnings call and dodges it 3 times. Then 3 months later, we hear, oh, all of a sudden you're slowing hiring and you're going to slow investment spend on some of your teams. Folks, this confuses me, and one of the things that I always say, and we talk about this in the course member streams as well when we do fundamental analysis, is you have to remember these companies are trying to sell their stock. That's pretty loud. I don't know if you can hear that. Hello, das ist ein Rettungswagen. You call 112 and then the Rettungswagen comes. Some people call it a Krankenwagen. Anyway, rescue wagon or sick wagon, whatever you want. Anyway, let's walk. So the way to wrap this up is really just to think somebody's not telling us the truth. Either the banks aren't telling us the truth because they want their stocks propped up because they want investors to think, oh, well, people are still spending on cards. And as long as people are still spending on cards, then maybe loan growth will go up. Or it's companies that don't want to admit that consumers are going to slow down on spending because they want their stock to remain strong for their employees so that stock-based compensation is valuable to them, right? And their employees are happy. Their existing employees feel more productive, whatever, right? Maybe. Or here's another potential reality. Maybe Apple is a leading indicator that maybe the banks are right. Maybe in the last 6 months, the consumer spending has still been strong and the consumers have been great. And this is probably the bigger warning, right? Maybe Apple in just the last couple weeks is actually finally starting to see the consumer slowdown that the banks are not seeing yet or not talking about yet. And so maybe Apple is actually a leading indicator that finally we're going to see the consumer spending slow down. And that's actually what's going to create the recession going into Q3 and potentially Q4 as we get our second quarter of negative. Thoughts? I think it's a warning. I think it's a lesson in terms of when we look at earnings calls and how companies operate, how chief executive officers or whatever, CEOs, CFOs, how they can sort of cherry pick data to suggest that their company's still doing great. You should buy their stock, when the reality is that the day-to-day fluctuations are actually a red flag. My thoughts, check out the program's link down below. Use that coupon code before the price goes up. And folks, we'll see you in the next video.